Hey everyone, I'm Hannah from Conjura, and we have recently released our Amazon Ads connector. So I want to take some time during this video to run through what that actually means and how best to make use of this new data source. So first, we're going to take a quick look at how to use Conjura's consolidated reports to track our Amazon ads performance alongside the performance of our other digital marketing channels. So I'm going to use the performance overview dashboard for this. This is a high level kind of summary dashboard. We're going to get into the more detailed ones later. But here I can basically see the data from my connected sources all in one place, a full picture of my business, without clicking between different tabs or creating spreadsheets. And it's a great way to easily compare each sales and marketing channel against each other. So by default, these KPIs here are all blended. So they'll show like an aggregate view of my D2C, like my Shopify or BigCommerce, and my Amazon activity together. So for example, gross revenue and orders are a combined view of my orders from Shopify and from Amazon for the date range that I've set up here. So similarly, ad spend will be my total ad spend across all of my connected channels. So paid search like Google and Bing, paid social like Facebook and TikTok, and now Amazon ads as well. So most importantly, because we are talking about profit at Conjura all the time, contribution profit takes marketing spend into account. So by connecting my Amazon ads, I've unlocked this profit KPI for my Amazon sales. So now I have a more holistic view of my overall profitability across the different channels in my business. So straight away, I can see my overall profit has dropped by 7%. But using the channel group split here in the bar chart, I can see how that contribution profit varies per channel. And a few channels are contributing to this reduction. So this orange line represents what it was in the previous period. So in particular, Amazon or this marketplace channel is down. And I can see that Performance Max is down significantly as well. Just calling out that this is split by individual marketing channel, but I can also split by sales channel instead. So this gives me a more kind of rolled up view. All of my D2C marketing channels are rolled up into this web store value. And I can see that both web store and marketplace have seen a reduction in profit versus the previous period. So I want to see how my ad spend has varied compared to the previous period. That will help me start to dig into why my profit might be down. So I'll switch the KPI to ad spend. Okay, and I can see super clear that I've increased my spend on Amazon a lot, and I've decreased my D2C spend a lot. So I've clearly reallocated a lot of my D2C budget to Amazon. I can switch back to this channel group view just to get a bit more specific. I think for ad spend, this view makes more sense. So it's not just D2C in general, it's my Performance Max. Specifically, I've taken money out of Performance Max and put it into Marketplace. So I can see that that has upset the balance a bit. And as a result, I've seen a drop in my contribution profit. Of course, there's lots of things to consider here, but likely my next steps would be to reallocate some of that budget back from Amazon and back into my Performance Max campaigns until I see an increase in profit for both of those channels. But something else to take into consideration is the products that are actually being advertised on Amazon to see if there's any quick wins, products that aren't performing well, or products that are performing particularly well, and I might be able to redirect that budget towards those. And that's what I'll get to in the next section. So now I want to run through how to use Conjura's product level insights to identify which products generate the best returns for our Amazon ads. So the product table is the place to go for this. This is where we get really granular SKU level insights. So using data at this level is really crucial for making the most informed decisions about marketing and merchandising even. So like before, by default, I'll see everything all together. So these are my Shopify and Amazon sales. but I do want to focus on Amazon specifically for now. So I will add in a filter. I'll just filter to channel equals marketplace. So now all of the sales are only my Amazon orders and the ad spend is only my Amazon ads. Just a quick tip, I can pretty quickly get an idea for the trends in my data by changing the source. So by default, it's sorted from high to low based on profit, but I could switch that to be low to high instead, or I could use a different metric. So I could see what I'm spending the most on or spending the least on, like where is my marketing budget going. So resorting the table like that gives me a rough idea of those trends, except using Conjura's metric filters, I can get much more specific with it. So for example, I might want to filter down to products with a high margin. So I only want to see products with a contribution margin above 50%, which reduces this list down. And maybe I want to make sure that I've sold enough of them as well. So I'll do units sold greater than 50. So, okay, I've only got 2 products here, but this essentially is my list of products to prioritize in my advertising because they've got profitable returns even at a high volume. One more tip is that any kind of product segment that I make in this way, it can be saved so I can easily access the updated version of this list quickly in future. So I just click up here and give my view a name. I can make it private or shared. So that just means only I can see it or everyone in my org has access to it as well. So then I'll save it. And in future, it appears in this list so I can quickly access my kind of high profit, high volume products again in future. One final thing is that this is just one example, except there's lots of possibilities here. So I can customize the metrics in this table, and any metric works with those filters and with the saving views. So obviously every business is different in what they're prioritizing. So you can pick whatever you want to optimize on and create segments based on those KPIs instead. So we talked about contribution profit a bit in the previous section when we were chatting through which products to prioritize in your advertising activity. So I do want to go into a little bit more detail now because contribution profit is one of the things that's available within Conjura that's not available within Amazon's native reporting. There's a few more customer-centric reports that are also unique to Conjura, and I'll cover those in this section as well. So to chat through the contribution profit definition, I'm going to go back to the product table. Like I said before, you can customize this to whatever metrics you want. And we do have some predefined sets as well that we suggest people look at. So this contribution set gives me my profit and all of the revenue and cost calculations that feed into that profit calculation so I can see what my profit is made up of. So I'll save this, and now I can see my gross revenue, my refunds, my tax, ad spend, marketing fees, COGS, shipping costs, transactional costs, and Amazon fees all coming together to make my contribution profit. And then that expressed as a percentage is my contribution margin. I can filter this down to only look at Amazon. So I'll filter to the marketplace channel. Okay, so now I can see what is my profit at a product level for the Amazon channel and how does each constituent part kind of vary across my products. So here, for example, I'm making a loss on the Tiger because I'm not selling it. I've made no sales, except I have spent some advertising dollars on it. So I've made minus €202. I have a negative contribution for a few products here. So the whale and the elephant, for example, I'm not spending as much as on the Tiger, except it's still a lot compared to what I'm making in net revenue. And also the fees are quite high for this elephant toy as well. This fees metric is a combination of FBA fees, Amazon's commission, the listing fee. There's about 12 different fees that you can look at the Conjura Help Center to get more info on. All of those feed in to the product level Amazon fees metric. So here I can get an idea of how my ad spend and my costs that come from Amazon Seller Partner are feeding into my overall profit, and at an individual product level too. Those customer dashboards I mentioned are also unique to Conjura and not available within Amazon's native reporting. So here I'm looking at my LTV. I'm just going to filter it to Amazon only. So I'll use the marketplace channel. This is basically showing me how many customers I acquired last year. What was the CAC of those customers? How many orders did they place on average within that first year? What was the average value of those orders? What was the lifetime value of those customers? And the lifetime contribution value of those customers. So this version of the LTV metric takes all of those costs I mentioned before into account and shows you what each customer is worth to you after a year. So I filtered this to one channel, so the channel level chart is kind of redundant at the moment. I'll change it to a product level view. So this is showing me how many customers I acquired via each product on Amazon last year. I could change this KPI to anything that's listed here, so I could see what product is driving the highest LTV or driving the highest repeat rate. And this stuff is all really important to understand how my customers are behaving throughout their lifetime and the quality of the customers that I'm acquiring. Now, that being said, because we're looking at the customer's first year, this is most useful when you're looking back in the past. So I'm looking more than a year in the past so that I've had that data building up over time. If I want to understand how my acquisition and retention are balancing each other out right now, I can use this new versus existing dashboard. This is more of a recent view. So I'm looking at the last 30 days and I've basically split all of the orders from the last 30 days into new and existing. So I acquired 791 customers. 317 existing customers also place an order with me during that time. Now this is blended at the moment. I'll filter it to Amazon only. I'm just trying to highlight that while there's a lot of value in looking at Shopify and Amazon together in Conjura, there's also a lot of value looking at Amazon by itself, because we're adding a lot of extra reports here that you can't get within Amazon's native UI. So the use case for this dashboard is to understand if there's any differences between my new and existing cohort, essentially. So here I'm seeing 75% of my revenue on Amazon is coming from new customers, and only 25 or 24 is coming from existing. So this highlights maybe I'm relying too much on acquiring new customers, and I should maybe focus more on retaining those. Now that is hard on Amazon because it's easier to build kind of brand loyalty on your D2C site. But here I can see the importance of that retention on Amazon. So the existing customer AOV is a good bit higher than the new customer AOV. So what this is telling me is when those customers do come back, they spend more than the new ones. So if I can drive retention on Amazon, that would be a good way of driving a higher overall customer LTV as well. Everything we've covered so far, the consolidated reporting, the product level insights, and the enhanced Amazon analytics, are all crucial for figuring out which channel works best for you and for what products. So I'd like to chat a little bit more about comparing Amazon to Shopify and how to weigh up the pros and cons of each channel. So I'm going to have a look at the product table again. Basically, at Conjura, we found that Amazon fees are generally higher than what you need to pay to operate in a Shopify store, but you will usually be spending more on marketing your D2C store than marketing on Amazon. So I would recommend using the product table to dig into how your costs and overall profitability vary by channel. So I'm going to split by sales channel and use my contribution KPI set. So this is a high level view of my cost breakdown by channel. So you can see what I mean here. My contribution margin is roughly the same between the two channels, even though I'm spending much more on marketing my D2C, almost double. But I can see that the Amazon fees pretty much make up that difference. I would also recommend filtering to each specific channel and looking at a product level view like we did before to see if there's any particularly profitable or unprofitable products on either channel. So here I'll go back to a product view and see how they're all doing on Amazon. So this is useful because certain Amazon fees actually vary by product category. So this view is useful if you sell across multiple categories. Some categories or individual products could be more profitable than others simply because of the fees. And then also remember to use the metric filters like we did before to see products with a profit above or below a certain amount. So the last time we did this was to find our most profitable products on Amazon, to prioritize those ones. But you can go the other direction as well to find everything with a negative profit, for example. I will switch back to that higher level view now. So I want to see my cost breakdown at a channel level again. I'll just remove these filters and switch this split back to sales channel. So, like I said before, the ad spend is a lot more on my D2C store than on Amazon. But this is to be expected because with D2C, you're establishing yourself, you're building a brand. So naturally, you need to spend more on advertising. But with Amazon, you instantly have access to millions of customers all over the world. And the focus there is more on the product being sold rather than the brand or the store that's selling it. One thing to note though is that the marketing dollars spent on building your D2C brand is often worth it. So you'll see what I mean if we go back to some of the customer dashboards we saw before. So I'll go to the new versus existing dashboard. Basically, while it's quick to get up and running with Amazon, it's difficult to build brand loyalty there. So like your brand doesn't really have an identity there. I don't have any control over the consumer's experience on the site. I have no control over post-purchase comms. And I can't re-engage customers with email outreach about new products or an offer that I'm running. So I can see the impact of that here by looking at my existing customer KPIs. I'll just look at them in these charts here. So I'll change this to existing customers, split by sales channel. And I'll change this one to existing customer revenue by sales channel. So there are some customers coming back on Amazon, but it's nothing compared to my D2C store. And I can dig into that a little further again by switching to the channel group view. So here I can see that my email campaigns are a big driver for that retention. And that's something that my Amazon customers aren't receiving. It's also worth noting that email is a pretty cheap channel. So I do need to invest more in marketing upfront on D2C to build my brand. But then retaining those customers via email campaigns is much cheaper. Just one thing to point out is this chart is showing the number of existing customers who've come back and placed an order. And this line chart, this is showing existing customer gross revenue. So that's what those existing customers are actually spending. So that's their kind of real world money implication of that retention. So one more thing is the LTV dashboard is a great place to see how that impact of customer loyalty builds up over time, because this is kind of stacking up the whole customer's lifetime. So I'll just quickly look at LTV gross revenue by sales channel. And again, I'm seeing that my web store, my D2C or Shopify has a much higher LTV than my marketplace or Amazon orders. To summarize, Amazon and D2C can both be profitable channels, obviously, but which one is right for you depends on your business goals and the category or categories that you're selling in. So while Amazon fees can be high, a lot of the heavy lifting is done for you there in terms of getting your products in front of consumers. And of course, they'll even do the fulfillment for you if you're doing FBA. D2C requires more of a time and money investment in order to establish your brand and get traffic to your site. But then that investment can pay off in the form of a loyal customer base and more control over their experience with your brand. So by connecting Shopify and Amazon stores and all of your marketing platforms to Conjura, you can get an idea of how each of those sales channels is performing for you and weigh up how each of the patterns we discussed is affecting your business.